Good afternoon. It is Wednesday, November 15th, 4 p.m. Anniversary of Sherman's March to the Sea. Sherman's March. He cut a swath through the South during the Civil War. Pretty much destroyed everything in his path. Started today. Interesting that it would start today. Because it began just a long path to the sea with just destruction and burning and destroying. I think it's very appropriate with these markets. But anyway, 4 p.m. stock market just closed. Wanted to wait to get this video out. President Trump said he was going to deliver an important message at 3 p.m., 3:30 p.m. I wanted to wait to hear that, see if it had any effect on the markets. So I deliberately held off to listen to that. I think that the key takeaway is this fair trade he keeps talking about. And we'll get to that. But once again, people, they did it again. They did it again. I took a picture of it. Gold was up. Gold was up to 1288 earlier. Okay, it had a high of 1288, almost 1290. Boom! There it is. There it is. Can I make one thing very clear? Gold is not an investment. Gold is a war. Okay, this isn't like investing in Chipotle or Snapchat or pick any other stock like that. This is a war, okay? And the battle is going on right here at this level. This range that I've been saying for, it's got to be a few weeks now, right? Is getting tighter and tighter and tighter. The bears can't take it down. The bulls can't break out, okay? And I saw this article today, more of a trader's perspective. Oh, but before I get to that, I want to just clarify something from yesterday's video. Somebody responded, made a comment, and I appreciate all the comments. He said, GLD, ETF, I'll pass. So I want to be clear, because at no time in yesterday's video did I recommend GLD. I didn't recommend any ETF. I merely stated that Ray Dalio had increased his gold exposure, okay, and he did it through GLD, okay. I would not recommend GLD. I would recommend buying physical gold and silver, okay. So I didn't recommend GLD, all right. So if that was the impression he got, no, I would not recommend the paper, okay? If you can't stand in front of it and defend it, you don't own it, okay? All right? If you can't stand in front of it and defend it, you don't own it. So I would recommend the real physical gold and silver, not GLD, okay? Just wanted to be clear on that. All right. So, getting back to this narrow trading range. This is an article I saw basically talking about how we haven't been in a trading range like this since 2005. Okay? Gold prices have been stuck in a trading range that one analyst says is the narrowest in 12 years, and he's right, okay, which would indicate upside potential for the metal. Now, they've been trying all week to break through, and the Crimex, these paper, okay, attacks have just been preventing it. But if you look at the price act, you see it wants to go through. It wants to go up there. Okay, it wants to break out. April 2005 was the last time the gold market was this compressed from a technical analysis perspective. The range, according to McGlone, that's the analyst, and he's right, lies between 1267 and 1285. If support is breached, meaning to the downside, then 1200 gold comes into play. I would agree, but they're trying to breach this and they're not able to do it. So I'm liking the resiliency I see in gold. I've been saying that the last few days. However, McGlone is a little more optimistic, calling for the US dollar's 2017 downtrend to continue into 2018. And we saw that yesterday. The dollar was hit very hard yesterday, right? Very hard. And today it didn't rally. It was down again most of the day. So after the big sell-off yesterday, the dollar didn't even have a bounce today. So I said this is very important. I'm going to refresh my screen. This iPad gets slower and slower. The dollar, 93.80. It's down a penny. So even after yesterday's sell-off. Okay, so this is very important. If gold holds above 1285, it would be an indication of breaking out higher from an extremely tight range. Sustaining above this level would indicate a failed sale attempt, indicating a coiled market that's ripe to spring. The 20-day Bollinger Bandwidth at 1.7% is the narrowest in 12 years. So this range, it's going to come to an end one way or the other. I believe it's going to break out to the upside. Okay, I mean, unless they just do these shenanigans. All right. So, so President Trump, he wanted to talk about this fair trade, and it reminds me of the old expression: if I owe you $100, I got a problem. If I owe you $1 million, you got the problem, right? This relationship, this pull me, push me relationship between the United States and China, right? They both want lower currencies. They both want to be able to debase their currencies, which will help with exports, okay? It's a fool's errand. It's going to end in failure, okay? That's the stupidity again, all right? So he keeps talking about this fair trade. We have to reduce this trade imbalance. At the end of the day, what does that mean? He wants to see a stronger yuan and a weaker US dollar. That's how I read this thing. So this is major, okay? He wants a weaker dollar. He wants a stronger yuan, all right? Be careful what you wish for, okay?
Here's to the flavorful. Those unafraid to show their signature style, signature move.
Sorry about that nuisance. Another pop-up. These pop-ups just come out of nowhere. So China has $1.2 trillion worth of U.S. treasuries, right? Japan, I think, has $1 trillion. I think the total outstanding U.S. Treasury reserves in the entire world is like $5 trillion, okay? So, that's like that analogy. I owe you $100, I got a problem. I owe you $1 million, you got the problem. So who's got the problem here? China or the United States? We owe China $1 trillion. China's got the problem, okay? But at the same hand, the United States has the problem, okay? It's all about debt, right? If we debase our currency, well, their pile of cash is basically going down. Why they continue to buy these treasuries, I have no idea. Okay? Well, I know why. They buy it to keep their currency low. That's what they're doing. So we're selling them garbage and they're taking it. So their currency could be even more garbage. Okay? This is what's going on here. It's fueled by stupidity. It's all gonna blow up. So they buy treasuries to support the dollar so the yuan won't strengthen. This is what's happening here. Okay, so it's all about the debt, people. It's all about the debt. And you see, they're doing everything in their power, okay, to hold up this bond market, okay? Stock sold off big time this morning again. 3 days in a row. They hit it in the morning. It was down about 160 points again. It could not come. It tried to. It tried to come back again today, but then it sold off again, right? Finished the day down about 135 points, the Dow. I told you yesterday, right? If it was me, I'd take some money off the table, all right? Consider stocks the lotto ticket, okay? Everybody who was in stocks, they hit the lotto, okay? They made money in spite of themselves, okay? But you know what? The party don't last forever, okay? Nothing lasts forever, all right? And you can see there's starting to be some chinks in the armor here. That's how I see it. So this debt, I saw this. I did some research today because, you know, you heard Venezuela is restructuring their debt with the Russians, and oh, this is all good news. It's all no, it doesn't make the debt go away. This is like I max out one credit card, okay, so then I get another credit card to pay off that, and how does that ever end? You got to change the behavior. Okay, you can play around with all the credit cards, but the only way to get rid of the debt, if you max out your credit, you got to change the behavior. You got to rip up the credit cards, and you got to say, I don't need that second TV. I don't need that instant coffee machine. Okay, I don't need that gadget. I don't have to go out to this restaurant. Right? That's the only way. But they're not going to do that. This system needs more and more debt. So you got Venezuela restructuring their debt. Well, it's just debt. It doesn't make the debt go away. You got Puerto Rico is broke. I'm looking at the debt to GDP ratios of countries. Japan, the debt to GDP ratio, 220% debt to GDP. Greece, 179 debt to GDP. Portugal, 138. Italy, 137. I have a friend. He's going out with a girl. She lives in Italy. She wants to come to the United States. There's no jobs over there. There's no jobs here either. Bhutan, 118%. Cyprus, 115%. Belgium, 114%. The United States, 106%. The debt per capita in the United States is $61,000. So every man, woman, and child in the United States owes $61,000. Okay? $20 trillion in debt. Spain, 105%. It's all debt, people. Singapore, 104%. Whew. France, 96. Canada, 92. United Kingdom, 89. So, you could see the handwriting on the wall. Debt, debt, debt. So, we got to watch this. Keep your eye on the dollar. Let's see if we could break out tomorrow. They kind of won the battle again today, the Bears, taking it down below that 100-day moving average. But you see that gold wants to go. So it's going to only take this manipulation right now to keep it down. Other than that, that's pretty much it. Again, I think this key takeaway, as far as this trade imbalance, stronger yuan, lower United States dollar. It's good for gold. Okay? So that's it, people. Still got some daylight outside. Very nice day today. If you could get out, take a walk, stretch your legs, get some fresh air. Lord willing, we pick it up tomorrow. Ciao.